Alright, so in today's video, guys, we are going to do the whole question paper which were written last year September. So basically this is a common test for, please make sure that you watch all the video as I'm going to cover all the question that was part of this question paper. Alright, so question 1 that we are going to focus on is a statement of comprehensive income and a tangible assets note. So this question contains 60 marks. That's a lot, guys, because it's almost 75% of this question paper. Okay, then question 2, we have a ratio calculation that we are going to do, which contain 20 marks for this question paper. Okay, so you can check there. We have been given a minute that you are required or you are expected to complete this question. For question 1, we have 54 minutes. Question 2, 18 minutes. Question 3, 18 minutes. Please make sure that you following those time. Otherwise, you're not going to complete your question. Alright, then question 3, we are going to do interpretation of financial information. So it's also 20 marks. Alright, as you know, in grade 10, of course, you are going to be given what we call a answer book. Okay, as you can see here, I managed to draft a short answer book that you are going to be provided. Okay, before we do that, let's check our question 1. Okay, question 1 is a statement of comprehensive income and note. Okay, so of course, beside the answer book that they are going to provide to you, you have to make sure that you know a format. It's very important because the format that they are going to provide it for you is not going to be complete, or it's not going to be enough. As you can see, they're not going to give you, for example, other operating income. You have to identify them through a transaction that we are going to read. So please make sure that you know the format before you go through the question paper. Okay, let's analyze the information together, then we can start with answering the question. Okay, question 1, they said a sole trader in grade 10 will deal with a sole trader, grade 11 will deal with a partnership, then in grade 12 you are going to do a company. So for today's lesson, of course, we are going to do a statement of sole trader. Okay, then a statement of comprehensive income and note. Use the following information from Make Traders for the financial year ending 28 February 2022. So you have to make sure that you know what is financial reporting. Why are they saying that our financial year is ending 28 February 2022? Okay, so what you have to know first is that our financial reporting period must have 12 months. Always, our financial reporting must have 12 months. It doesn't mean that if it's 12 months, it must start January until December. It can happen that a financial reporting is starting 1 July and is ending next year 30 May. So it can start any month. Alright, so in this question paper, we've been given a financial year that is going to end on 28 February. So if our financial year is ending 28 February 2022, which means that this year started last year on 1 March 2021. So this date, guys, they are very, very important. Okay, so you're gonna see it when we go to some transaction, as I'm going to explain into detail. Okay, then let's take required part. Required part number 1, they said prepare income statement of comprehensive income for the year ended 28 February 2022. Then it's 43 marks. That's a lot of marks, guys. And we also have a method mark when we prepare income statement. Okay, then 1.2, they said calculate a missing figure in the tangible fixed assets note, denoted by a letter A to D by using information number 9. Okay, now let's focus on required number 1. They said prepare income statement or we call it a statement of comprehensive income, or we can also call it a profit and loss statement. Okay, then let's go to information. Okay, additional information that we have. The first one, we've been given a pre-adjustment trial balance on MES traders on 28 February 2022. Okay, we have a balance sheet account section, and we also have a nominal account section. So guys, when we prepare income statement, you have to make sure that you use your nominal account section. Okay, but it doesn't mean that we don't have any amount under a balance sheet section that is going to affect income statement. We're going to have them, but I'm going to explain later which one are they going to form part of income statement. All right, let's take our nominal account section. Number one, we have a sales. Number two, we have cost of sales. Number three, we have debtors allowance. Okay, number 4, we have salaries and wages. Number 5, insurance, bad debts, stationary telephone, bank charges, until interest on fixed deposit. Okay, so that's the major balances that we are going to use to prepare our statement of comprehensive income or income statement. Okay, let's look at the additional information that we have. Additional information, number 1, they say they received 40 cents in rent from insolvent estate of Shukela Gumede, a debtor who owed a 1,600, and the remainder must be written off. No entry have as yet been made. Okay, let me explain this transaction into detail. What happened is that we, as a company, we face some crisis. We borrow someone, and the person was not willing to pay us. Okay, then we decided that no, as a company, that person, we can see that he cannot be able to pay us the full amount of 1,600. Then we decided that okay, that person can only pay us a 40 cent for each and every rand that he's owing us. In other words, guys, it's like a 40%. He's going to pay us a 40% of the total amount of 1,600, which means that the remaining balance, we're going to write it off as a bad debt. When we say a bad debt, it simply means that that amount we won't be able to recover it, which means that under our side, it's an expense, it's a loss to us. Okay, then this transaction, of course, we are going to record it under income statement. Okay, then number 2, a telephone account for February 2022 is 1,830 was still outstanding. So guys, it's very important to go through each and every transaction first before you start with your income statement. Why? The reason is because you will find that we have some amount that is going to affect a sales and you didn't read the transaction, which means that you are going to prepare a wrong income statement. So please make sure that you read each and every transaction and make sure that you understand first, then you can start preparing. Okay, then number 2, we said a telephone account for February 2022 is 1,830 was still outstanding. Okay, then a transaction like this, guys, I want to introduce a short principle that you have to use so that it can be very, very simple for you to deal with transaction like this one. Okay, we have a principle under a gap principle that we call it a matching concept. Okay, or a matching principle. Guys, this principle simple means that all incomes and expenses that we have to make sure that we record them for 12 months. This principle means that income and expenses must be recorded for a period of 12 months. So what is going to happen under your transaction for income statement? They are going to give you some transaction that they recorded more than 12 months, which means that, for example, if they recorded for 14 months, which means that 14 months is out of what? Principle. It's not matching with the principle of matching concept, because they said it must be 12 months, which means that in case of 14 months, you have to subtract 2 so that you're left with 12 months. Then it's going to be a matching concept. So if they give you a transaction, maybe for example, that they recorded 10 months, which means that what you have to do, you have to make sure that you add a 2 months so that it can give you a 12 months. Or if they give you a transaction that they recorded 11, you just have to make sure that you are going to add 1, then it's going to give you 12. You have to make sure that you record the transaction for a 12 months. That's a matching concept. If they said the balance is still outstanding, which means that if it's still outstanding, it's not yet recorded, which means that we have to go and add so that it can give us a balance of for the whole year, for 12 months. Okay? So if they said there is an amount that has not yet received, which means that it's either they recorded 10 or they recorded 11. It's because there's some money that has not yet received. We have to go and do it and add so that it can give us what? A 12. That's the principle. If they said there is another cash that has been received in advance, which means that they over-recorded 12 months and make it more, which means that if they make it 13 months, we have to go and reduce 1 so that it can give us 12. We go and subtract 1 and it gives us 12. You have to make sure that all your income and expense is for 12 months. Then it will be good for you to go. Okay? So that's the principle that I want to explain to you before we proceed. Okay, let's go to another one. They said the loan statement received reflects the following. Okay, I skip number 3. Number 3, they said a rent for March 2022 has already been received. Okay, remember our financial reporting period is ending 28 February. Now we have received amount of rent for March. What about this principle of matching concept? The matching concept said we have to record for 12 months, which means that in this case we have recorded 13 months, which means that we have to calculate that amount and go and subtract it so that it can remain 12, which means that even in this transaction, we are going to apply the principle of matching concept. Okay, then number 4, a loan statement received reflects the following. Number 1, on 1 March 2021, they give us a balance, then we have a repayment, then we have interest capitalized, and balance on 28 February 2022. Okay, then they said provide the interest on loan. We're going to do that. Okay, insurance include amount of 1,900 paid for period 1 January 2022 to June 2022. June is above what? 28 February. It has exceeded, which means that it's not complying with what? Matching concept. We have to go and subtract those months from March up to June, because it's more than 12 and we have to record only 12 months. Okay, then they said provide outstanding interest on fixed deposit, which means that we're just going to calculate interest using a percentage. Okay, then there was a fire in a business on 20 February 2022 and merchandise was damaged. The insurance company has agreed to pay only 8% of claim as goods were underinsured. Their settlement, they paid amount of 12,800, which was received and recorded. No entry has been made for the loss. We have to recognize that we have made a loss, which is an expense. Okay. Then number last, a stock on hand on 28 February 2022 as per stock sheet. A trading stock 71,000, packing material we have 9,950. So guys, you have to know that all opening balance that we have, when we open a bracket for calculation, we add them but closing we subtract. Okay, closing we subtract because we are going to use it next year. Opening is balance for last year. You have to know that. Grade 10. Okay, now we have done reading our transactions. Now we have to start with our income statement. Okay, let's go to our nominal account section. Number one, we have a sales. Okay, as you can see on our answer book here, we start with sales, then we go to cost of sales and gross profit. Okay, let's start with sales. A sales amount that we have is 1,792,840. 1 million, you have to start by brackets, guys. 1,792,110. Let me check again. 840. 840. Okay, then after that, guys, we have to make sure that we go back and check if we have any debtors allowance. Debtors allowance simply means that there's a customers who have returned a goods, which means that that amount we can't recognize it as a what? As a sales. We have to go and subtract it. Okay, let's take on our books. We have 21,840 of debtors allowance. 21,840. Okay, 21,840. We are just going to subtract it. Okay, then after that we're gonna calculate amount of sales. Okay, let's go back to our book and check a cost of sales. Okay, a cost of sales amount that we have is 840. Okay, which means that we are going to take 840 as a cost of sales. Okay, for this one we don't have any transaction. We're just gonna say 840,000. Okay, remember guys, cost of sales, we are going to subtract it from sales balance that we are going to calculate. Okay, let's go back and calculate our net sales. It's 1,792,840 minus 21,840. Then it's gonna give us 1,771,000. Then after that we say this amount minus cost of sales, sales minus cost of sales, then it's gonna give us a gross profit. Okay, let's do calculation. 840, then it's going to give us 931,000 of gross profit. So that's the first part of income statement, guys, that you have to make sure that you do it very correct. Okay, so please make sure that you like this video, guys, and if you haven't subscribed, please make sure that you subscribe, because this channel is going to teach you accounting until you complete any qualification that you are going to do that is related to accounting. Okay, let's proceed. Now we have to go and check if we have any other operating income. Then after that we're gonna go to operating expenses. Okay, let's check under a nominal account section. If you can see, we have a debit side on the left side and we also have credit side on the right side. So the amount that is on the debit side or on your left side, normally they are expenses. On the credit side, normally they are income. Okay, now let's go and focus on the right side, which is income on the credit side. Okay, we have rent income number one of 66,800. Okay, we're gonna say a rent income. Okay, firstly you have to open a bracket, guys, for income and expenses and check if we have any effect that we have to adjust. Okay, then amount is 66,800. Did we read any transaction that is related to rent income? Yes, we did. Let's go and check. It's transaction number 3. If you still remember, transaction number 3, they said the rent for March 2022 has already been received. Okay, Then they said the rent was increased by 600 per month with effect from 1 January 2022. Okay, so like I said before, guys, we have applied the principle of concept. So this transaction, they recorded amount of for rent for March, which is very wrong because it's going to be 13 months and it's supposed to be 11. Okay, then what do we do now? We have to check out it was how much that rent, because they only give us that the rent has increased by 600 from, okay, they say from 1 January 2022. So how are we going to do that? Very simple, guys. Which means that before January, rent was less by 600. Okay, so this is the calculation that we have to do. Okay, the amount of rent that we have, it was how much? It was 66,800. Okay, it's for 13 months because they paid for March as well. But from January, rent has increased. So this is what we have to do. We have to subtract those rent increase first so that we can get a rent before increase. Then we're gonna do what? Add back 600 that has increased. Okay, how much are we going to subtract first? Remember they said they increased 600 per month. Simple means that it's 600 for January, for February, and for March, which means that it's for 3 months. We're gonna subtract 600 January, 600 February, and 600 for March. Okay, let's calculate and see, check how much is it going to give us. Minus 600, minus 600, minus 600. It's going to give us 65,000. Then after that, now we can divide by 13. Why 13? Because they also paid for March, which means that they exceeded that 12 months. Okay, divide by 13, which means that the rent before increase, this is before increase because we subtracted those increase. That's why we said this is before increase. So 5,000 is before increase. Now after rent has increased, which means that we have to add 600. Then it's gonna give us 5,600. Simple as that, guys. Simple as that. So which means that this 5,600 is the one that we have to go and subtract, because it's for March and the principal said we have to record only 12 months. We have to go and say minus 5,600. Okay, let me write it clear. 5,600. Okay, now let's calculate. 66,800 minus 5,600, then it's gonna give us 61,200. Simple as that. Okay, now let's proceed. Let's check if we have any other income. Okay, we have a commission income. A commission income. Okay, we open a bracket and say commission income is how much? 30,620. Okay, but from the transaction that we read, guys, we found that we don't have any effect that is related to 30,000 commission income, which means that we're just gonna write it as it is, 30,620. Simple as that. Okay, now again on the credit side, if you can check, we have interest on fixed deposit. Guys, make sure that you don't recognize interest on fixed deposit under other operating income. We're gonna do it on the financial, on the last part. Okay, I'm gonna explain the finance part at the end. Okay, now let's proceed, which means that you just have to add these two, then it's gonna give you amount of other operating income. Okay, then if you add 61,200 plus 30,620. It's gonna give you 91,820. Simple as that. So now we have to go to our operating expense. That's where we have a lot of transaction. Okay, let's go back to our nominal account section. The first one that we have on the debit side is cost of sales and debtors allowance. We already adjusted those two. We don't have to repeat them under operating expense. Okay, which means that number one, we are going to do salaries and wages. Okay, we have salaries and wages. Okay, then amount that we have is how much? 187,000. 187,000. Okay, then another one that we have insurance, and we also have a bad debt. Another one, we have stationery and telephone. And we also have telephone. Okay, what else? We have bank charge. Okay, then what else? We have packing material and advertising. Okay, then another one like a trading stock deficit and loss due to fire. We're gonna add them after this. Okay, let's start with insurance. Amount of insurance that we have is 25,000. Did we have any transaction that is related to insurance on our transaction? Let's check. Okay. Number one is bad debts. Number two is telephone. 3 is rent income. We have loan, insurance. Number 5. Okay. Now they said 1,920 was paid for January to June. Okay, which means that is for January, February, March, April, May, June. That amount is for 6 months. But out of that 6 months, we have to make sure we record until February. Okay, which means that the amount that is applicable is only for January and February. The one that we have to subtract is for March, April, May, and June. It's for 4 months. Let's check. This is what we have to do. Amount of 1,920, we have to divide it by 6 and see how much was it per month. It was 320. Now because we have to subtract for those 4 months, we just multiply by 4 and we get amount of 1,280. So this is the amount that we are going to subtract because it's after 28 February. Okay, it's 1,000. We subtract, guys. We subtract minus 1,280. Okay, we're gonna calculate the balance after. Okay, now let's take the next one. The next one, we have a bad debt. Okay, bad debt, we have transaction number 1. Okay, but apart from number 1, we have 17,600 from our trial balance. 17,600. Okay, then now number 1, they said received a 40 cent in the rent from insolvency estate of Shukela, who made a debtor who owed 1,600. Then the remainder must be written off and no entry has yet been made. Okay, which means that we are going to receive only 40 cents or 40%, and 60% we are going to write it as a what? As a bad debt, which means that we are going to add a 60% of 1,600. Okay, 1,600. Okay, 1,600 multiplied by 60 cents or 60% is going to give you the same. Okay, let me calculate. It's 9,600. Okay, and 9,600. We are going to add it because it's a loss. It's a loss to us because that person is not going to pay us this amount anymore. Okay, now let's proceed. The next one that we have, it was a stationery. Okay, do we have any transaction related to stationery? No, we don't have, which means that a stationery amount of 28,640, we just have to write it as it is, 28,640. Okay, another one, a telephone, 42,900. We have to open a bracket because we have it. Number 2, they said a telephone account for February 2022, 1,830 was still outstanding. Okay, so which means that that amount we have to go and edit 1,000, and let me check again, 1,830. Why are we adding? Because they said it's still outstanding. It has not yet recorded, and the principal said we have to record 12 months. Okay, so which means that we must add so that it can give us 12 months. Okay, then now let's go to bank charge. A bank charge, I don't think we have a transaction. Then let's take amount of bank charge, 22,800. Okay, 22,800. Okay, then another one, we have a packing material, which we have a transaction, a 40,000, and the transaction for packing material that we have is a closing balance of 950, which means that we have to go and subtract 950, then we're going to calculate the balance. Okay, then now let's proceed. The next one that we have is advertising. Okay, advertising, I don't think we have a transaction, 11,280. Let's check if we have transaction, 11,280. We don't have any transaction for this one. Okay, let's go back and confirm if we have adjusted all the transaction. Okay, we still have number 7 that they said there was a fire and the insurance paid amount of 12,800. This is what we are going to do, guys. Make sure that you follow this step. Okay, this is what we call a loss due to fire. Okay, now the question is, did we lose 12,800? No, we lose 80% of that inventory that we have. Okay, if you can see here, they said the insurance company has agreed to pay only 80%, which means that the 20% is the one that is a loss. Okay, how are we going to determine the inventory value, because they only give us 80% of what they pay? This is what we do, guys. A 12,800 is 80%, which means that we have to say 12,800 multiplied by, now we are going back to 100 out of 8, and we get exactly amount of inventory. Okay, if you do this on your calculator, let's see how much are you going to get. 100 over 80 is going to give you 16,000. Okay, which means that you're gonna say 16,000 minus 12,800. We get the difference between the real value and what they paid. Then it's gonna give us amount that we are going to regard it as a what? As a loss. Okay, if you can calculate this, let's check how much is it going to give you. 2,800. It's going to give you 3,200, which we are going to regard it as a loss. Okay, then now let's proceed. Okay, another transaction that we have to do is a trading stock deficit. Okay, a trading stock deficit. How do we do this? Very simple, guys. The first one, you take the balance from trial balance. Okay, this is the one that we have to take under balance sheet account section. Okay, at the beginning it was 88,000. It was 88,000. Then now we have to subtract amount of 16,000 of the value of inventory that we lose, 16,000, and we subtract the balance at the end. Okay, if you can check the last transaction, guys, number 8, they said we have 71,000 of inventory on hand. Okay, so this is what you have to calculate so that you can get how much a trading stock deficit that we have. Okay, 88,000 minus 16,000 minus 71,000. Okay, it's gonna give you a 1,000 of trading stock deficit. Okay, let's check if we have any other transaction. The transaction that we have interest on loan as well as outstanding interest for fixed deposit. Okay, after that, guys, you are going to get operating profit. Okay, then after operating profit, that's where now you can calculate interest income. You are going to calculate interest income. Then after that, you're gonna get profit before interest expense. Then you go to interest expense. Then after that, you're gonna get a profit. A profit for the year. Very simple, guys. Okay, but now before we proceed, we have to make sure that we calculate total of this balance so that we can be able to get operating expense. Then after that, we calculate our operating profit. Okay, so a salary amount is going to remain as 187,000, and insurance is going to be 25,000 minus 1,280. It gives us 23,720. Okay, and the other one is 17,600 plus 9,600. It's gonna give us 27,200. Okay, another one we have 42,900 plus 880. This one is for telephone, that is going to give us 43,730. Okay, then another one, 40,000 minus 950 is gonna give us a 39,050. Okay, then another one, this one we calculated and this one we calculated. Okay, which means that now we can be able to calculate our total expenses. Okay, we add everything here and we put here 187,000 okay, plus 23,720 plus 27,200 plus 28,600 640 plus 43 730 plus 22 800 plus 39 50 plus 11 280 plus 3200 plus 1000. Okay, so it's gonna give us 387,620. Okay, then after that, now in order for you to get operating profit, you have to say a gross profit, then you add it with other income. Okay, which means that you're gonna say 931,000 plus 91,820. Now expenses, you have to do what? To subtract. Okay, minus 387,620. Then it's gonna give you amount of 635,200. Okay, now we can proceed to other income. Okay, this is interest income. This part, that's where we put our finance. Interest income and interest expense. Let's take interest income first. Number 6, they say provide outstanding interest on fixed deposit. Okay, then it's how much? Let's go on top and check. They said fixed deposit on Juju Bank is 8% per annum. Then the amount is 48,000. Simple, guys. You just said 48,000 and you multiply by the percent that they give you is 8%. Then it's gonna give us an answer. Okay, then 48,000 multiplied by 8%, it's gonna give us a 3,840. Very simple. Okay, then after that, this is what you are going to do. We have to check if we have interest expense, but before that we have a profit before interest expense, which means that this one plus this one is going to give us before interest. Okay, 635,200 plus 10,840, then it's going to give us amount of 639.42. Okay, then now let's go to the loan amount, because it's the one that is going to give us interest expense. Okay, what is it? Number 4. Okay, opening balance minus payment. Okay, let me explain here clear so that you will understand. Okay, let me wrap this part. Okay, then our opening balance, they said, is 300,000. But out of that opening balance at the beginning of the year, we make some payment of 92,400, which means that it's minus. Then if you take these two balance and you compare it with closing balance, it's gonna give you interest. Okay, interest is here. Then a closing balance is 234,600. Simple means that we are going to say on our calculator 300,000 minus 92,400, then we minus 234,600, then it's gonna give us 27,000. 27,000 is interest. You just say 300 minus 92 and minus 234, it's gonna give you 27,000. Make sure that you write it in brackets because it's an expense. Make sure that all expenses you write with brackets. Okay, now we have to calculate our profit for the year. We take 639.42 minus 27,000. Okay, then it's gonna give us 612.42. Simple as that. If you do that, you are going to complete your income statement very simple. Okay, now the next part, we have to complete what we call a fixed asset. Okay, if you check transaction number 9, they give us a tangible asset, or we call it a fixed asset. Okay, however, in this question they didn't say that we have to complete all of it. They give us the figures that we have to calculate. Okay, apart from that, but I'm going to do another video that I'm going to do a fixed asset into a detail, where we are going to start it from the scratch until the end. You have to make sure that you stay tuned on this channel so that you can also learn a fixed asset into detail. Okay, let's check. Number 8, they said we have to calculate a cost of equipment. Okay, if you can check the first part, they give us a carrying value. What is carrying value? A carrying value is equal to cost minus accumulated depreciation. A carrying value is like a net, because you are going to take your cost minus accumulated, then it's going to give you a carrying value. Okay, so for number 1, they give us a carrying value, a cost, then accumulated for the beginning. Then they give us a movement. A movement is what happened during the year. Okay, with additional what we purchased during the year. Then we also have depreciation. It's a loss that happened during the year. Then after that, they give us a carrying value, cost, and accumulated at the end. Okay, for number 8, they are looking for cost of equipment. How do we know it? Let's go and read additional information. They said provide depreciation as follow. Number 1, vehicle on at 25% per annum on cost. Number 2, equipment 20% per annum on diminishing balance method. Cost, we use our cost price to calculate depreciation. Diminishing, we use carrying value to calculate depreciation. Okay, then note, additional equipment with total of 24,800 was purchased on 1 September 2021, and this transaction was recorded and therefore included in September balance above. Okay, now this is what we are going to do. Number 8, they are looking for cost price of equipment. We don't know it, but we know that during the year, if you can check on edition, they recorded 24,800, a new one, and they say the balance at the end is 260, which means that if we said 260 at the end and we subtracted what they bought during the year, we're gonna get what they have at the beginning, which is number A, which means that number A is very simple. Number A is 260,000 minus what they bought during the year, which is 24,800. Then it's gonna give us the balance at the beginning. 260 minus 24,800. Then it's gonna give us 235,200. Very simple. Okay, now let's proceed to number C. Why C? Because C is still at the beginning. Then we're gonna do the other part. Okay, number C, for vehicle, they're looking for carrying value. This one is simple. A carrying value, this is the formula. Carrying value equals to cost minus accumulated. And if you can check, we have cost at the beginning and we have accumulated. We just go to subtract, then we get a carrying value. Okay, our cost is 560 minus 112,000, and it's gonna give us how much? 560 minus 112,000, then it's gonna give us 448,000. Okay, now we are done with number C. Very simple. Then number B and D, they are very similar. Okay, Now the question is, where do we start? Let's start with vehicle, which is number D. Why? Because it's a cost. I want you to understand the cost model first, then we can go to diminishing balance method. Okay, a cost, they said we have to use 25% per annum on cost. Okay, which means that we're just only going to use what? A cost price to calculate depreciation. A cost price of vehicle is how much? It's 560. We're just gonna say multiply by 25%. And this gives us amount of, let's calculate, 140 is our answer. Okay, is our answer for number D. Now we have to go back to B. Okay, B, we are going to use a diminishing balance method. When we say diminishing balance method, guys, again and again, this is the same as carrying value method. Instead of using cost, we are going to use a carrying value, which means that we don't use cost only. We have to subtract depreciation first. Okay. Now, again, another problem is that we have another vehicle that has been purchased on 1 September. Remember, our year is ending 28 February. Simple means that that vehicle stay September, October, November, December, January, February is equipment actually, which means that the equipment of 24,800, it was there for 6 months, which means that we also have to count a month, which means that for number B, let's start by new one. It was costing 24,800. We are using a diminishing balance method. By this time, depreciation was 0, which means that we are going to minus 0 and we multiply by a 20%. And after 20%, guys, we also have to multiply by 6 over 12. Why 6 over 12? It has been purchased on 1 September and it stays 1 September until February, which is 6 months. Okay? Let's calculate 24,800. Okay, multiply by 20%. Okay, then multiply by 6 over 12. Then it's gonna give us 2,480. But we're not done. Remember, we have those balance at the beginning, which we already calculated. We call it old one. Old one, we have 235,200, which we have to minus accumulated depreciation first, which it has been given as you can see below. Number A, we have 69,200. 69,200. Okay, then we're gonna get current value, because this method of diminishing, we have to use current value, not cost. Okay, then we're gonna say 235,200 minus 69,200. Then we're gonna get 116,000, and we multiply by 20%. In this case, because old vehicle was there for the whole year, we don't have to do what? We don't have to subtract all those other okay, because it's old, we don't have to calculate for a month, guys. If we calculate for a month, it's still going to be 12 over 12, which is not going to change anything. Okay, so it's going to be 166,000 multiplied by 20%. Then it's going to give us 33,200. Then your answer for number B is 2,480 plus 33,200. Okay, 2,480. Then it's going to give you 35,680. Okay, so this is how you should complete your tangible assets in short. But we're going to do explanation for this part. I'm gonna look for another question that we have enough transaction. Okay, now we have to go to number 2 and number 3 quick. Okay, it's not going to take time. Make sure that you just proceed in watching this video so that you can learn and prepare for test. Okay, let me just wrap all this part so that we can have a space. Okay. Okay, now we are going to question 2. Okay, then question 2, we are going to do what we call a ratio analysis. A very simple one, because they are also going to provide you with a formula sheet. But you must know the formulas, guys, so that you won't have any problem. Okay, let's read the question. The following information was extracted from accounting record of Manchester Traders, the business owned by S. Mahlanga, who is selling a school uniform in Dumbe area. Required. Calculate the following ratio indicators for the year ended 30 June 2029. Show all calculation to the nearest two decimal place. Okay, number 1, they said we have to use solvency ratio 5 marks, current ratio 3, acid test 4, then return on average owner's equity, then operating expense on sales. Okay, then let's start with solvency ratio. Solvency ratio. Okay, under solvency ratio, we are going to use the formula total assets is to total liability. You know that when we talk about total assets, is current assets and current liability, non-current assets, total liability, non-current liability, and current liability. Okay, let's check our information on the balance sheet. Okay, then let's start with total assets, which means that we're going to add all the assets that we have. Okay, the first one that we have is 2,250,000. Okay, let's confirm which year did they say we have to calculate. 2019. Okay, I think they made a mistake here. They were supposed to say it ended 2022. Okay, we're going to calculate for 2022. Okay, so it's 2,250,000. Then we edit 250,000 is a fixed asset. Then a fixed deposit is also a non-current asset, which we are going to edit. Is how much? Is 150,000. Okay, and we also add all current assets. Okay, if you can see, guys, under a current asset, they give us a total already, which include inventory, trade and other receivable, cash and cash equivalent. Okay, then our current assets gave us 1,287,500. Okay, this is all total assets. Okay, then we are going to say is to total liability. Let's go and check for 2022. Total liability, we have non-current liability and current liability. Okay, we're just gonna add 18. Okay, actual is 818,750 plus 368,750. Okay, then now let's add them. Let's add them together. Let's start with total asset side, 2,500 plus 150,000. Okay, plus 128,700. Okay, then it's gonna give us 1,460,000. Okay, is 2. Let's add the other side. 818,750 plus 368,750. Okay, it's gonna give us 1,187,500. Okay, now we have to divide and see. Okay, we take the one on the left, 146,000, divide by 1,187,500. Then it's gonna give us 1,22:1. This side is always 1, guys. Okay, so this is how we should calculate a solvency. Let's go to number 2, which is current ratio. Okay, a current ratio is very simple. It's current asset is to current liability. It's not the same with solvency. Solvency is total assets, is included non-current, guys. Okay, now let's check our current asset. Okay, we have it. It was 1,287,500 is to current liabilities given as 368,750. Okay, now let's calculate 1,287,500 divided by 368,750. 349:1. Okay, this is how you should calculate your current assets. This simply means that the company will be able to pay a short-term debt, because a current is a short, non-current is a long period. Okay, now let's go to acid test ratio. Okay, when we talk about acid test ratio, guys, is the similar with current ratio, just that for this one we have to subtract what? Inventory. Okay, we're gonna say a current asset minus inventory is to current liability. Okay, let's just write answer. 1,287,500 is a current asset. Now we have to minus inventory. Okay, inventory that we have is 300,000. 300,000. Okay, then our current liability is 368,750. Okay, 128,750 minus 300,000. Then it's gonna give us 987,500 is to 368,750. Okay, then after that we're gonna divide it by 368,750. It's gonna give us 2,67:1. Simple as that, guys. Very straightforward, as long as you know the formula. Okay, then again we have a return on average equity. Then we do the last one and we go to question 3. Okay, okay, a return on average equity return on average equity. Okay, the formula that you have to use is a net profit divided by average equity. Okay, the first part that you have to look for is net profit, then we'll proceed. And net profit, you get it under income statement, then it's gonna be 525,000 on our income statement. Now when they said average equity, we go to balance sheet. Owner's equity, we have a balance of 2,500. But when we say average, guys, we have to add these two amounts for this year and for last year, and we divide by 2. Okay, it's gonna be 2,500,000 plus 1,475,000. Then we divide by 2, which means that you must add these two balance first. 2,500,000 plus 1,475,000. Then it's gonna give us amount of 3,975,000, and you divide by 2. Okay, then we're gonna expand this to this way. 1,987,500 is after what? After we have subtracted, guys. After we have divided by 2. Okay, then now we can say 525,000 divided by 1,987,500. Then multiply by 100 is going to give us 26.4%. Okay, so this answer for this ratio must give us in terms of percentage. Okay, then the last one, they said operating on sales. Okay, operating on sales, guys, simply means that we are going to take operating expense and we divide by sales and we multiply by 100. Okay, let's go to income statement. Operating expense is 700,000 and we divide by amount of sales is 1,875,000. Okay, it's 700,000 divided by 1,875,000. Okay, then after that, when we multiply by 100, it's going to give us 87%. Okay, so we are done with question 2 of a ratio. So now let's go and do the last question, which is not going to take time. Question 3, it is about interpretation of financial statement. Okay, so they give us, you are provided with the information of Ponchisto for the past 2 financial year and 30 September. Okay, the business is situated KZN, Pongola, and trade in racing bike. Okay, the business is owned by supporter Bele. Okay, required, the owner took decision with regard the selling price and markup in this 2022. Okay, they said the owner changed a markup. So number 1, they said, what is the decision? Quote the figure to support the answer. Okay, which means that we have to quote something to support our answer that yes, it's true that they change a markup. Okay, 3 marks. We have to go to information and check. Okay, if you check on the statement that they give us, we found that a markup in 2021 was 72%. 72%, and they changed it to 58%, which means that when we quote, we're just going to show you that in 2021 it was 72 and they changed to 58% in 2022. Simple as that, guys. Then you will get the 3 marks. Okay, did the business benefited from that decision? And explain by mentioning 2 points from the question with the figure to support your answer. If you check, they reduce what? A markup, the value of what? Of profit. Okay, now we want to see if they benefit by reducing the price. Okay, how are we going to check that? Let's first check the sales amount. If you check our sales amount, it was 7 million 2021. It was 7 million. Then in 2022, it has increased to 30 million. Simply means that they benefited because their sales has increased. Okay, then now let's take the number of bikes that they sold, because it's also going to support the answer. Okay, in 2021 they sold a 900. Okay, but in 2022 they increased and sold 1750, which means that the strategy of reducing what, a markup, it was working, because more customers come and buy what, a bike, because of lower price. Okay, now let's check number 3.2. Comment on the liquidity position of the business and quote two financial indicators. Okay, when we talk about liquidity, guys, you have to think about acid test ratio and current ratio. Okay, let's check. If you check on the financial indicators, we found that last year in 2021, they have a current ratio of 2.9 is to 1. Okay, and it is decreased by 0.9 because it goes to 2.0 is to 1. But that simply means that the business can still be able to pay a short-term liability. Number 2, we have to think about acid test ratio. Let's say what happened on acid test ratio. It was 0.9 and it's go to 1.2. Simply means that the business can be able to pay a short-term liability without what? Without relying on inventory. Remember, when we deal with acid test ratio on question 2, we subtracted inventory, because inventory, they believe that is an acid. When we said acid, simply means that inventory can expire. Okay, so it can be converted into what? Into cash to pay our short-term liabilities. Okay, so business can be able to do that. You can see that acid test ratio is increased. Okay, then number 9, the owner is satisfied with the return he is earning in the business. Explain by quoting one financial indicator to support your answer. Provide the figure, financial indicator, ratio, percentage, and comparison of the previous year to support your comment. Okay, they were referring to all those questions that we were doing and all that I was comparing this year. Okay, now let's check if the owner is satisfied with the earnings that is earning. Okay, let's check. A return on owner's equity. A return on owner's equity is how much? In 2021, it was 17. Now in 2022, it's 20%. Now the question is the owner satisfied? Yes, because there is a improvement. Apart from that, guys, as you can see, on fixed deposit, the interest is only 14%, which means that 20% is above what? The interest that the owner was earning. Okay, so this is all that we were trying to cover. So this is the question paper that was written in 2022 September. Okay, so if you have any question, please make sure that you just comment so that I can be able to assist you. Okay, so I hope that I'm gonna see you on the next video. Hey, I'm done. Hey.